All right, gang. So you got in for trade 3, at the top of an uptrend, at the middle of this downtrend, and you got in for a buy. And you thought price was because you saw yellow candlesticks, and it did go past take profit 2, but then what did it do? Shot all the way back down, and now you're in a negative. Went back up again. You're thinking, okay, price is going back up because it's making what, higher highs and higher lows and higher highs, when really it's making lower highs and lower lows and lower highs and lower lows and lower highs and lower lows. As in a downtrend, price will make what? Lower lows and lower highs and lower lows. I'll show you right here in this example real fast. Price will make what? If we're in a downtrend, price will make lower lows, boom, lower lows and lower highs and lower lows and lower highs and lower lows. You got it for an entry for a buy once price made a lower high, and you're thinking price is going to keep going up and going higher and higher, and it makes a lower low, and it gets you out of this trade completely, and you lose all your money, and your broker takes all your money because you entered at this lower high, and you thought price for a buy, you thought price was going up and making higher highs, and it makes a lower low, and gets you out of this trade. So you have to understand structure, market structure, extremely important for your psychology. As price, was in a downtrend at that moment. Price was in a downtrend. If we go back to here, you got in for a buy, thinking price was making a higher high, and it's going to make a higher low and a higher high, and break past take profit 2, and this didn't happen until the next day. The 2 days from February 3rd all the way up to February 4th took 2 days for this move to happen to price broke past take profit 2. So you got in for an entry right here at trade 3, and just where you lose a lot of money at. Chances are you would have just stayed patient and waited for the right setup. You would have had seen like, oh, prices, now price is going back up. You could have got in at great trade 1 and great trade 2 and rode it all the way up to take profit 1. Um, that would have been the best thing to do, is stick to your trading plan and just wait for price to retest back down. As you got in for a buy right here, impulsively, and that's a real thing. You have to control your impulsiveness in this market. As you can lose a lot of money like that, and price shoots past all your trades, it makes a lower low past all our trades, and gets everybody out this trade before heading back up in the overall direction. As you can see, price would have made a lower low past all your trades. Price would have made, you would have gotten for a buy at this lower high, thinking price is going to make another higher high, and it makes a lower low and gets you out of this trade, gets everybody out these trades. So to avoid that, just stick to your trading plan. Just stick to your trading plan. Trading plan works. You get in at the bottom of an uptrend, at the bottom of a downtrend for great trade 1 and great trade 2, and you ride it all the way up to take profit 1, 18, 15. As you can see, more structure on the 15. And you would have been successful. You would have been successful. From 1791 to 1793 all the way to take profit 1. You would have made easily 10 grand, 20 grand, 15 grand, 5,000, 2,000. Sticking to your trading plan will make you more successful. I know Forex can be boring, and you just want to get in for a buy anywhere once you see yellow candlesticks, but you have to pay attention to structure, as price will stop you out. This is about entry, so you can't enter at the middle of an uptrend. You enter at the bottom and a bottom of an uptrend, not at the middle, as price can reverse it. This market can do anything it wants, and it will, and it did reverse and stop everybody out this trade, and you lost all your money. So it can be boring. I know it can be boring looking at candlestick patterns all day. Like boredom is an actual thing in Forex. And you start over trading, you place another trade at the top, thinking price is going up, and it heads all the way back down. And and you lose all your money, and you could have placed, and you can place as many trades as you want. Like literally, you can place as many trades as you want. As long as the market allows you to. And so you're placing like 1, 2, 3, 4, 5 trades, thinking it's going up, and it heads all the way back down, and it takes all your money. Um, you know, and the market will allow you to place all these trades. As long as you got enough money, enough capital in your trading account, it will allow you to place all these trades just to get you out you know, and take all your money, as the brokers will do that, you know, as the banks will do that. Um, and you have to think about that. You have to really think about that, what the banks wants to do, and you know what your brokers are trying to actually get your money. This is how your brokers, this is how brokers get their money from you, from us, and from, you know, allowing us to pay all these, allowing us to over leverage on a higher leverage when we really can't handle a standard lot size, and they allow us to leverage 1 to 100 to 1 to 500,000, you know, and leverage, you know, and you know, this is, you know, just to get us out of these trades, you know. So you have to just pay attention to all of that. As you can see, placing too many trades, you know, you can lose a lot of money if you're getting at the wrong direction. Obviously, we got in at the wrong direction right here, trade 3. If we thought price was going up and he was going to break past take profit 2, and that didn't happen until the next day. We didn't see a break above take profit 2 until February 4th. So price reverse at on trade 3, you know, and you got him for a buy, and it makes a lower low, makes a lower high. You think it's still making um um a higher high, and it makes a lower low. You got it at 1803, and it makes a lower low all the way to 1800, right to trade 1, and then eventually a lower low all the way down to 1788. So price reverse in the other direction, and like, you know, it's and now price is going against you, and depending on your lot size, now you're down 2,000, 3,000, or you know, price broke, or you know, or your broker, or you know, took all your money out your account, and you blew your account. When when you know, because you can't control your impulsiveness. You know, a trader impulsiveness is the actual thing in this market, where you just get it in impulsively, and you're not really analyzing the market. You're not really looking at structure. You're not. That's the first thing you want to do, is analyze the market and see what direction price is going in, what momentum, you know, price is going in, before you actually get in a trade. And you didn't do none of that. You just got in a trade. So you have to control your impulsiveness. You can't be impulsive. Like when it comes to trading, you can't be impulsive. You have to control your impulsiveness and remain calm, and you know, and motivated and persistent until you see a setup, until you see the right setup. If you see the right setup right here the next day, you know, and I understand it could be boring waiting for from February 3rd all the way to February 3rd, and then all the way back up to February 4th, just to get in, you know, just to get to see price go past take profit 2. But you have to wait. You can't be impulsive. You have to control your impulsiveness, if that's a real thing. When it comes to trading, you have to control your impulsiveness, and as traders are impulsive. You know, that's a real thing. Traders are can be impulsive, and it's likely to, you know, you're likely to lose more money that way. Just remain calm, stick to your trading strategy. As you can see, price from great trade 1, great trade 2, all it goes all the way up to take profit 1, all the way to 1814. So extremely important to understand. As you know, impulsive trading does come up. It's a real thing. As you know, boredom does come up. You start over trading. Impulsive trading does come up when you get bored, and then you get impulsively, and you're impulsively trading. You have to control that. A lot of real things come in when you're actually entering a trade in a live account, and you're actually trading with your real money, as you can lose all your real money, as this is a real Forex account. This is a real live account, and you can lose all your money in one day. You know, this is from February 3rd to February 3rd. Price goes from 1808, 1806 February 3rd, all the way down to 1788 February the 3rd. Gets everybody out this trade. Everybody. So the money will come. You have to remain focused and focus on your trading strategy, and you know, the money will come, and just wait for the right setups. You know, just wait for the right setup. Stick to your trading strategy. It works. Stick to your trading strategy. Stop trying to over leverage. Stop trying to get in impulsively. You know, trader impulsiveness is a real thing. Forex boredom is a real thing. Just looking at candlestick patterns over every day, all day, you know, it's a real thing, and I understand how that feels. But you have to wait and stick to your trading strategy, and wait for the right entries, as you can lose a lot of money getting in at the wrong entries. So this is all about entry. We're going to be diving in more and more about entries. All right, gang. So you know, just wait for to get in at this entry. Wait for price to retest all the way back down. Make sure wait for price to make a higher low. And you could have got in and rolled it all